Hello everyone and welcome back. My name is Greg Furman and these are the market positions for July the 11th, 2017. Now our first trade for tonight is going to be in the Forex market, specifically the Aussie-New Zealand cross pair. Now what we're looking at with this particular pair is a potential reversal back to the upside. Now the Aussie dollar came under pressure last week from the RBA. We had a pretty decent move to the downside, but now things have settled down. In my respectful opinion, the RBA wasn't that dovish, but the market did interpret it that way, and it caused the market, it caused the pair to move lower. VantagePoint, of course, picking up on that earlier, prior to that RBA announcement. But now we're settling in. We've got good trend line support at 103.50, so we know very clearly to keep our stops below there. Our key vantage point level is coming in at 104.53. We're closing at 104.52, so you can see that we're already starting to challenge that 18-day moving average yet again. Now, when we break down our individual crossovers, we can see we have a short-term crossover back to the upside off of this lower trend line. Our neural index is supportive of this particular move. We can see our predicted MACD has stayed strong, saying that, look, we're likely heading we're likely heading higher over the longer term, and that's basically what we've been doing. Now, we have failed at the 40 level on the predicted RSI, and this is telling us here, the way we would want to interpret this, is that we've now retaken the 50 level on the predicted RSI and potentially getting ready to turn back towards this 105.50 area, as we've been trading in this fairly narrow channel for the last several weeks. Now, not everything is rosy here, to say the least. When we look at our medium-term crossover, it's still pointing down, but our long-term crossover, a very difficult crossover to trick, and it is staying to the upside, albeit just barely. Now, a lot of activity around this 104.40 area. So when we look at all of this, guys, all we have to do is bring our daily report in here to fine-tune our entry point. So with the close of 104.52, again, this video is being done at 6:30 p.m. Eastern Standard Time on Monday evening prior to the Asian Open. So we're looking, after when the market opens, we're looking for a pullback to 104.17. We're then going to target 104.77 with all stops below 103.50. Now, if we can get moving on this particular pair and the Aussie regains its composure, we should be able to challenge this 105.50, the top of this channel. Now, if we break through this channel, we want to not only hold this position, but we want to add to it. So not just a short-term trade here, but potentially a good medium to longer-term trade. Now, when we go back here and look over the last 6 months where this pair has been, you can see that I'm drawing my trend line off of our swing lows coming off of early January. We've had a big move up, we've gone sideways, we've come back down, and now we've paused. So again, this we are experiencing a series of, even though we've had a sharp pull back lower, we're still seeing higher lows. So as long as that is in play and we're holding above 103.50, there is a bias still to the upside. Now, our second trade for tonight is going to be again in the ETF market. We're looking at the ProShares UltraShort, the triple Qs, the QID. Now, what we're looking at here is again a bet that the stocks are basically going lower. Now, what I find kind of interesting as of late is that, you know, over the last year or two, a lot of analysts have picked tops on the S&P, and now a lot of these same analysts are saying that essentially that we're going a lot higher in the equity markets. I'm not really in that camp at this particular time. So the more people that think that the market is the stock market specifically is very, very bullish, I have to call that into some kind of question here. Now, when we're looking at this, our key vantage point level is coming in at 1709. Now, when we look at this 1709 area, you can see we've closed at 1714. So this could potentially be a decent, not just short-term trade, again, a medium to longer-term trade also. Now, our indicators are very mixed here. They are moving lower, but we haven't broke below 40 here, and this move lower off of this new form trend line here appears to be corrective in nature. Now, all stops on this particular trade, we want to make sure they're below $16 per share. We don't don't want to get stopped out anywhere in this area here, guys. We want to stay in this thing long enough to see that if it can be actually profitable. So when we look at our individual crossovers, our short term is down, but our medium term is not convinced, and our long term crossover is not convinced either that this is a trend reversal in this particular setup. So with the crossover of the predicted MACD, absolutely has caught my attention here. When we look at the break of the zero line, the crossover on the predicted MACD from VantagePoint, this goes back to June the 8th, 2017. We've been moving basically up. We've had our pullbacks, but again, a series of higher lows. So when we bring all of this together, but mainly that break of that zero line on that predicted MACD, tells me that we're probably just correcting in nature. We may correct a little bit lower down into the 1650 area, but at this time, I'm not convinced of that in the least. So when we look at this, we want to stay on the long side, betting against those equity markets. And from here, guys, we go into that all-important daily report. So with the close of 17.14, we're looking for a minor pullback to $17 per share. We're then going to target 17.39 on an intraday basis, but a potentially bigger trade could be setting up here, guys. Now, if I look at this over the last 6 months, this thing has been over $23 a share. Okay, so the equity markets have absolutely had one heck of a run. We are all the way up at the $30 per share mark. But again, you can see that if we're looking at the ProShares short, once again, the reason why that this has been moving lower is this big rally in the stock market. So whenever I see a chart that looks like this, it's kind of telling me that this could be getting a little bit tired here. So we may have reached our bottom at $16 per share. Make sure that all your stops are below there, but we should realistically be looking, if the equity markets start to move lower across the board, then we would be looking at a move on this particular ETF back into that 20, 30, even $40 per share. So I think we're seeing some decent value down here, but we want to make sure we have stops also. It is clearly counter trend, but if the trend is starting to shift this year in 2017 on the global equity markets, then being in a ProShares UltraShort is definitely the place to be.